Guys and gals, welcome back to the channel. I want to go over first and foremost how wrong I was in the last price prediction video that I made on Sunday. I expected AMC to be in between $18 and $21 per share by last Friday. That did not happen. I expected to see a red and a green day in the markets the 2 days before the Fed meeting. That happened. I also expected to see a very bullish reaction after the Fed meeting. That happened, and we were fully positioned to take advantage of that. We had a lot of great trades last week, but AMC did not play along nearly to the same extent of other stocks. Other stocks rallied hard, 5 to 10% every single day. AMC, not so much. And I think a lot of that was headwinds to GameStop's earnings. Number one, we did see a bullish reaction, but it wasn't anything to jump up and down about. GameStop lost more money than what was expected, right? So it wasn't a huge win, but that was kind of the uncertainty that was the headwind for AMC as well. We'll talk about that briefly. I do want to talk about the weird move that we did see in after hours on Friday. I want to go over the economic data, the good and the bad case for this week, because what you experienced last week is called a bear market rally, and they are very explosive. But has the situation actually changed? What should we expect for AMC? What about the broad markets? That's what I want to talk about here in this video. So if you guys want to come trade with us, join the trading community. We had a lot of trades last week, and it pays for itself over and over and over again. So check that out if you guys want to be a part of it and get yourself those free stocks. Links down below in the description. And this goes without saying, hit the like button and subscribe to the channel because you want to be up to date on these videos as soon as they come out, because it's proven they will make you money. I think I was the only person to predict a bullish rally after the Fed. Let me know down below in the comment section if anybody else did, but I think I was the only one. So I'm going to take a little bit of credit for that one because I like to stick my neck out on the line for things that I believe in. But let's get into kind of what is going to happen. And let's first off just talk about last week a little bit more. Like I said, GameStop's earnings were not the greatest. They weren't terrible. They announced their NFT platform would launch and go live by the end of Q2, which was a good thing. They didn't necessarily give guidance on what they expected for their NFT platform, which you could say is not a good thing, but GameStop lost too much money. You still seen a bullish reaction, so that in itself is a good thing, but that uncertainty, right? After the Fed meeting, we got that rally, but you still had GameStop earnings the next day and after hours. So that Wednesday and then that whole trading day of Thursday was kind of up in the air because GameStop, if it moves up or down a lot, it's going to move AMC as well. So market participants really didn't flood into the stock or really flood out of the stock. They were positive days overall, but they were very muted compared to the 5 or 10% moves that you've seen in a lot of other stocks. So I think that was a big headwind that is now taken out of AMC and GameStop's overall market outlook, because believe it or not, the stock market hates uncertainty more than it hates bad news. The markets can deal with bad news. That's what the whole logic was around a bullish reaction from the Fed. I thought it was going to be pretty bearish overall, so it wouldn't necessarily be good news, but you're giving the markets clarity and certainty, so the markets really did like that. Now, let's talk about what is currently going on. What is going to happen next week? And I want to point out that we did not see a lot of news over this weekend. There has been a lack of news, and that's really weird to say because we've been flooded with news over the weekends. But as of right now, it doesn't look like there is any one major headline for the markets to react to. Over the last couple of weekends, there has been something, whether it is good or bad news, that the markets are gonna really like. But we're not seeing that as of right now. So stay tuned. By 4 p.m. today, when the next video comes out, when the second video of the day comes out, things could change, and I will report that to you guys. But as of right now, it's not giving me any sign of a clear direction. That's where you can always revert back to history and what happens during bear market rallies. And exactly what does Google say about a bear market rally? Well, it says a bear market rally refers to a temporary uptrend in prices during a primary trend bear market. This increase is usually between 10 and 20%. It starts suddenly and does not last long. Notable bear market rallies occurred during the stock market crash and the Dow Jones Industrial Average, and these happen all the time. You can see big moves on a day-to-day basis or even lasting a couple weeks. But that begs the question, did anything really change? If nothing really changed to the positive side, if you're not seeing any less chance of a recession, if people are still talking about a recession, if the war in Ukraine is still going on, if you're seeing China and COVID cases going crazy, if you're seeing Europe in a dire financial crisis or heading into that financial crisis, has anything really changed? It doesn't look so. It doesn't look to be the case. So could you continue to see a rally? Definitely. This could last a couple more weeks, or you could see us revert back to a lot of that fear. That's where really the next big headline you see is going to cause a little bit of fear, or a lot of bit of fear, or a lot of enthusiasm around the markets. And a tweet that just came out is this, which I definitely think is negative. I don't know if the markets will latch onto it, but it's definitely not a good thing. So it says, Hong Kong's Lam says 250 restricted orders have been served, about 350,000 tested in restricted orders. And then it says Lam says 23,000 positive cases found from 350,000 COVID tests. So that's a decently high positivity rate. And if you start to see more fears about China and COVID, that's going to be big because a lot of our US companies are based and have operations over in China. The most notable one is Apple, and they just had their Foxconn factory shut down, and I believe it's still shut down, and that is the largest manufacturer for Apple. So if you start to see COVID really take a foothold in China, like it looks like it is right now, expect supply chain issues to come back, inflation issues to come back, and just a lack of products. Something like Apple, they cannot afford to have a lack of products. That's going to hurt the markets a lot. So I think that's the next big potential bear catalyst that the markets will probably latch onto, as well as any escalation in Ukraine and Russia. I think at this point, any escalation, as long as Russia does not attack NATO or something else, a lot of that fear is already priced into the markets. I actually think that could be a very bullish catalyst, maybe this week, maybe in the next couple of weeks, for possible, peace talks or a ceasefire. Something along those lines would be very bullish, and that's going to outweigh anything going on in China, in my personal opinion, unless the COVID situation in China becomes a full-on lockdown, nobody is doing anything, all production stops. That's going to cause a huge market crash. So you really got to think what's the most logical thing here. And I think the COVID China situation is going to get a whole lot worse. And that means the MOAS gets even closer. That helps to restrict liquidity even more. And if we take a look at the margin debt that just came out over this weekend, you can see that the margin debt went up about $6 billion from January to February during a time of the markets heading down in a very substantial way. The margin debt in January, $829 billion. In February, $835 billion. So what does this mean? Asset values fell, margin went up. So you can imagine this like when you see that correlation going on where you're seeing things kind of starting to widen, it doesn't take a whole lot to start to see those margin calls, because you have the same amount of margin, you actually increased your margin, but your stock portfolios went down in value. So imagine that. You have the same amount of margin, you actually increase your margin, but your portfolio continued to go down. You're going to be prone to seeing margin calls, or at least more prone than not to seeing margin calls, rather than you just got rid of your margin. Hopefully that makes some sense. I think that's the best way to really put it into a picture and an analogy here. But I think that's going to be a big problem if you start to see COVID in China really start to take a foothold. But there is another big question here. We just seen a quadruple witching day on March 18th. This was $3.5 trillion. Now that money is freed up, and that's really why AMC had that weird move in after hours on Friday, which we will talk about in just one second. But what direction is a majority of that $3.5 trillion going to position? If that market positions to the bullish side, that's going to be very good. That's going to continue this bear market bull rally. Or if it positions to the negative side, if a lot of people start to hedge out their portfolios, buying puts, even shorting stock, you're going to help push the markets down even more. After all, $3.5 trillion is larger than about 98% of other countries' economies, their total countries, their total GDP, right? It's a very large amount of money. It actually might be bigger than 99% of other countries' total GDPs. It's I believe like your top 5 countries, maybe top 7 countries are above $3.5 trillion GDP. All the rest of them are smaller than that. So I hope that puts it into a little bit of perspective. I can't tell you which way it's going to position. I think it will be to the bearish side. But when you're seeing the Fed, like they did, come out and say a recession is not very likely, even though they could be talking out of their ass, and they probably are, the markets are going to latch onto that and be very happy. Now, if you start to see that priced into the markets even more, which will likely come due to China, COVID disrupting everything, that will definitely cause a recession. If you start to see those fears, you're going to see that outweigh what the Fed said. So it's really up in the air here. I wish I could give you guys a definitive answer, but that's why I want to go over really the bull case and the bear case, and that's what I've been doing. But we'll get into the actual price targets in just one second after we get into the data. So the data for AMC, as far as the Ortex data is concerned, you're looking at 21.23% short interest of free float, 109.38 million shares that are sold short, cost to borrow max of 2.32%, and the utilization of 100%. The cost to borrow is 1.27%. That's the average. Like I said, cost to borrow max of 2.32%, and the days to cover is at 2.92. This is telling you that the short interest, the amount of shares sold short, is continuing to go up, and the volume is continuing to trend downward. So that makes it very hard for shorts to get out of their short positions once we actually see volume come into the stock, and that's going to be the main key. Will we see bullish volume come into the stock as well? And if we actually look at the technicals here, for AMC stock, we went under 15 last week. We closed above $15 last week. We've seen a very bullish reaction in after hours as well, up 1.52%, and that was because the quad witching, if you get assigned or you exercise a contract, it's usually done in after hours of that expiration day. So that's what happened, long story short, and that's why you did see that boost to AMC share price. If you sold puts or sold calls, more than likely, if they were in the money, well, it's a fact. If they were in the money, and you lost on those, you got exercised. So somebody else had to come in and buy the stock. So that definitely helped boost up the share price of AMC as we closed above 15. That helped to boost us to where we currently sit at $16.05. But nonetheless, it looks pretty good. It looks like that $15 support level is validated yet again. And it looks like, in my personal opinion, you'll likely see a bullish sentiment to the markets maybe the first couple of days. Like I said, depending on what the headlines are and the markets, what headlines they focus on. This market is really driven around the headline news. It could go either way next week, but what I think will happen is that we'll probably come up and retest this 50-day moving average at about $17.50 per share, and then we'll likely come back down to about $16.50. Overall, I think there will be a gain for the week, but probably not a huge gain for the week. Now, if you want to get very bullish and you think this is going to be a major rally, then you would think the stock would go to about $18.50. The headwind around GameStop earnings is out of the way, and you should see room for the markets to let AMC rally. As far as the bear case here, you could go down to $15 flat. You could go down to $14 flat. I really think that would be the bear case here. So just to reiterate, the bear case, in my opinion, is dropping about $2.05 down to about $14 per share. I don't think we're going to come down and test these 1290 lows. I don't think you're going to see that kind of fear in the markets unless China just locks down the whole country or something. Who knows when it comes to China? That's why this is so difficult. And I think it could go either way because who knows what's going to happen, right? If China came out and said, yeah, we're done doing this no COVID policy, we're just going to let it do what it's going to do, we're going to operate as normal, markets would fucking tear off of that. I don't know if that's going to happen. Let me know your thoughts down below in the comment section. What do you guys think is going to happen, as far as that is concerned? But like I said, $14, for the bear case here. The bull case here would really be around $16.50. But if it's really good, we could head back above $18.50. That's if everything goes well. Now, if you see Russia, Ukraine come to a ceasefire, the markets are definitely going above, I should say AMC definitely going above $20 per share. No doubt in my mind about that. I don't know if that will happen, but the MACD is looking very bullish. It just hit this bullish crossover right here on Friday, so that's good. Typically, when you see that crossover, definitely to the bullish side, it tends to rally from there. So that's looking good. The RSI indicates we could rally a lot more before we even get close to overbought levels. We're still under the neutral level at 50. We're at 45.93, so that's also looking good. The 50-day moving average, like I said, at 1749, so we have a bit of ways to go to the upside before we see any solid level of resistance. Above that, it's $25 per share for the 100-day moving average, and these are just the major moving averages: the 50, the 100-day, and the 200-day moving average. I think I got the 500-day moving average on. Well, so that's take that for what it is. That's at $34. 200-day would be around here, probably about $30 per share, give or take. But the situation looking very good as far as that is concerned. So let me know your thoughts on this down below in the comment section. What do you think is going to happen? That information is very valuable to me. It helps me to come to a better conclusion for myself because I love inputs and opinions, and that's exactly why I personally watch YouTube videos. So thank you guys for that. Hit the like button, subscribe to the channel. Like I said, comment down below and get yourself those free stocks. Links down below in the description. Sign up with Moomoo for a limited time only. Deposit $1 less than a Snickers bar or a McDouble or a bag of Doritos. Get yourself 3 free stocks as well as an additional free share of NEO upon your deposit clearing. That promotion will not last long, so take advantage of that virtually free money. And if you guys want to come trade with us, link down below in the description to do that. Lock in your price now before the prices do go up, because just the Snapchat trade last week made you enough money to cover that cost for about a year. And that was only one trade of like 5 to 10 winners we had. So check that out if you guys want to be a part of it. Thank you for watching. Enjoy the rest of your weekend. I will see you later on tonight on the live stream.